Hey everybody, happy Friday. Chris Magnon, your lender for all over Colorado. Of course, coming to you with my Friday market update, and it is just brutal out there. I feel like I'm kicking my own butt. Yes, if you've seen the headlines about mortgages near 20-year highs, those unfortunately are true. You never know what to believe out there, right? But for sure, we do have mortgages right at 20-year highs right now. Bond yields are basically the highest that they've been since '08. And mortgages are creeping into the mid-sevens, which is actually right about where they were October, November of last year. And why? Well, it's continuing that the U.S. supply of debt is excessive. Basically, the U.S. government is pumping out so much debt that has to be mopped up, bought up globally, and we just have more debt being pushed out there than globally is being absorbed. And you factor in Japan has very high yields right now, like their debt interest rates, their treasuries are going up dramatically, and we are always going to be in competition with Japan. So it kind of unfortunately makes sense that we have these super high yields right now. Didn't anticipate it. No one thought that the U.S. government was going to push quite this much debt out there, so more supply than expected. But at the end of the day, it's always going to be a roller coaster when it comes to mortgage interest rates. Now, will this impact the housing market? Is this going to crash the market? Well, certainly the naysayers will say yes. The naysayers said that the housing market was going to crash when interest rates hit this level a year ago. Of course, it did not crash. So you judge for yourself. Right now, demand is basically stable, basically flat from last year. You can easily tell that by seasonally adjusted mortgage application data. Almost identical to last year. Yet we have supply that is lower than last year and less properties that are coming on to the market than last year. So, same demand, less supply. In my opinion, that is a recipe for price stability. Last year, of course, prices went down, depending upon the neighborhood, 1%, 5%. Will they go down this fall? It's hard to say, but we're still operating in an extreme low inventory environment, and it just does not take much demand to have a competitive market when inventory is that low. If you like this video, click like. If you have questions about financing a home, please give me a call. Let me know. For sure, have an awesome Friday.